Welcome to Mad Money. Welcome to Kramer. I'll do make friends. I'm just trying to make you a little money. My job is not just to entertain, but dedicate to a little teaching. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You know why I first got into this wacky business? Stories. Stories, that's why. Tremendous, intriguing stories. Tales that could explain what's going to happen, and you could actually make a little money from them. And that's what's happening right now. And the stories are driving much of this action. It's why the market's buoyancy continues. Dow dipping 11 points, S&P advancing 0.47%. NASDAQ filled with stories of great potential, gain 0.94%.
House of pleasure.
Let me tell you more about my obsession with stories. When I got out of college, I became a reporter. I love telling stories. I write them every day. In that business, it worked, but holy cow. For the first 3 years, I never made more than $179 a week. By the end, I was living out of the backseat of my Ford Fairmont. Suboptimal. When I started looking for a job on Wall Street, I set my sights on Goldman Sachs because I figured stories could matter there more than anywhere else because it was known as an equities house. I was right. So I met this guy, David Darst. He was at a Harvard Business School party I crashed at the Ritz-Carlton downtown Boston. I could see that he was bored stiff with all the HBS hangers on around him. So I pushed my way into the inner circle, got ready for his questions. Sure enough, he asked the assembled if they were a stock, which one would they be? Well, none of these nerds said anything, so I piped up, I would be Exxon, biggest in market cap, biggest in revenue. I said, that was child's play. Hit me with something hard. Come on, challenge me. Darst smiled, grabbed me by the arm, took me to see the fantastic partner in charge. Okay, there were probably 36 interviews in 2 years before I ultimately got the job at Goldman, including one day where I was waiting in an office for someone to interview me, getting there at 9 a.m., as I was supposed to, and staying until 5 p.m. No one came in. When I poked my head out, everyone had gone home. I regarded that as a minor setback. Called the next day, saying that while I learned a lot because I brought a lot of reading material, next time I'd like to meet some actual people, have a few conversations as a way toward perhaps getting a job. I was told that the solo treatment was meant to be a source of discouragement because I was not wanted. I said that I expected that to happen a lot on the way to getting the job, and I found it somewhat of an obstacle, but not anything I couldn't overcome. Couple more days where I was interviewed and turned down. I kept showing up, finally got the job. You know why I was confident that the job would be mine? Always. Because I knew how to tell a story. David Darst, whom I saw just Monday night, always championed me because of my brazen Exxon answer, because of my storytelling ability. I bring this up right now because we are at an inflection point, people. We can either focus on the minutiae, 20 basis point move in the 10-year, 10,000 jobs lost in some cohort tomorrow. A Federal Reserve chairman who wants to see if tariffs cause inflation, because they always do. We can obsess about a Fed governor who agrees with Chairman Powell in some ways and disagrees with others. Sorry, didn't mean that. Or we can keep an eye on all of that, but focus on some stories that can make us some money. That's not crass. That's our ultimate goal. Not the prediction of when the Fed will move or new Fed governor gets appointed. Let's not mince words. We're trying to make money here. So let me tell you about a story about Vietnam. Back on Liberation Day, the president set a 46% tariff on exports from Vietnam. Hardliners in the White House believed that China had infiltrated Vietnam, taking over a lot of commerce. Now, I knew this story. Why? Because I had read Eric Ambler's fabulous novel, Passage of Arms, written in 1959. Which included an ample description of how China controlled all the big industry, especially finance, retail, and small industry. Of course, that was a very long time ago before the Sino-Soviet split, China's war with Vietnam over who would control Cambodia, etc. Now, I don't know if the hardliners in the White House are Ambler fans, but this 46% tariff put the kibosh on so many big companies that moved their manufacturing from China to Vietnam. Now, see, they made that move to stay on President Trump's good side, but it did the opposite. Since then, I've watched some of these apparel and furniture stocks get annihilated by their unlucky supply chain shift out of China into Vietnam. But today we found out that the Vietnam tariff would only be 20%, not great, but certainly less than what Trump proposed on Liberation Day. We all knew that Nike moved a lot of stuff to Vietnam, and that was the easy story. Hence why it shot up 4% today on top of a lot of other points since it reported. Hey, but how about some other stories? I remember having Richard Dixon, CEO of Gap, on the show right after the unfortunate Liberation Day tariffs and after his quarter. Stock was crushed. A decent story. Good rally. Laura Albert, CEO of Williams-Sonoma, moved a ton of manufacturing to Vietnam. Her stock's down more than 6% for the year. Intriguing. Jumped more than 2% on the tariff news, but that's nothing. Hey, Levi's had a decent story when it reported some Vietnam exposure there. RH, Steel Restoration Hardware, feels dicey, especially with that balance sheet, but it could be a nice short squeeze. Listen, I'm telling stories here. Given all the product that they've sourced in Vietnam, who else? Okay, I got a wild one for you. Contour Brands, the parent of Lee and Wrangler jeans. They have almost no manufacturing in Vietnam, forget that. But it just acquired Helly Hansen, the outdoor apparel company affectionately known in the Kramer family as Helly R. And Vietnam is a major manufacturing hub for them. Ooh, I like that story. What else? All right, those who own Whirlpool have been longtime sufferers. One of the stocks I first bought in 1983. It's pretty much the same price. It's hurt because it's the only real American manufacturer in the industry, and all these other countries dump their appliances on our country. LG and Samsung, by the way, are from Korea, and Harriers from China. They bought the GE appliance business. But now they're facing some big steel tariffs. Suddenly, Whirlpool's in the driver's seat. They could be beneficiary of these foreign companies. Wow. It just ran 35 points, though. But it's still a good story. Let me give you another story. The dollar keeps getting killed, right? We keep hearing chatter all day about how it's dangerous that the greenback's at a 4-year low. Dangerous. I can't believe my ears. Have these naysayers ever been on a consumer packaged goods conference call? Practically every country on earth loves to devalue their currency in order to make their exports more competitive and kill our competition, kill our commerce. Go listen to a Procter & Gamble call, any call. And you know what you hear? They're always complaining that the dollar's too strong, so when their big earnings from overseas, and this is a great company, are translated back to our currency, their profits are dramatically lower. Now, I don't like Procter & Gamble stock that much here, but it's pretty obvious they'll be able to beat the numbers thanks to that weaker dollar. Oh, and I don't want to go too far afield. The meme buyers after yesterday's staycation, they're right back. They're buying Palantir, the ultimate story stock. They're buying Coinbase. They can't stay away from that. And Robinhood. I mean, like, you know, man in tights. I expect Palantir, currently at 132 and change, to go to 200 this quarter. Can't avoid buying another data center. Welcome back, NVIDIA. And don't forget its fellow travelers like Texas Instruments, Broadcom, NXP Semiconductors. Semiconductors have become the new software stocks. And the huge deal, Oracle, after the close. You can read about it. Here's the bottom line. Just like you couldn't ignore the choice of Exxon 38 years ago and all the metaphorical power of a good, solid story with a solid dividend, you can't avoid today's news stories either. And I promise you, I will keep telling them. Why? Because that's where the money is. Let's go to Thomas in Georgia. Thomas.
Hey, Jim. Thanks for taking my call.
My pleasure.
I've phoned in a couple times, and I've never taken the time to thank you and Jeff and the team for the incredible product that is the CNBC Investment Club.
Okay, that's Jeff Marks he's talking about, and thank you. We're about to have our annual meeting. I can't wait. I've been working on it around the clock, but that's because I'm having trouble sleeping right now. How can I help you?
Well, I've owned Etsy since the pandemic, and I took about half my basis off back in 2021 at the 250 to 280 level, a very different valuation compared to now. And I'm currently sitting on the remainder of that basis at a 50% loss. And I guess what I'm looking for from you is a nudge, either a nudge to keep it, because I do believe in the company and the management, or the nudge to sell because there are...
Oh, no, Thomas, I don't want you to sell. Now, this is a problematic story because I do believe there are execution issues. But I also think there's a core belief that there's a lot of value here, and that's why the stock's at 52 after those bad quarters, not at 40. I want you to hold on to it. And if it goes back to where it was at a low, I want you to buy more. The franchise is worth more than the stock. Let's go to Bill in Massachusetts. Bill.
Hi, Jim. You got me in this equity at $170 a share. Now it's at $215. I absolutely love it. I believe in everything you said about it. But if I buy it at this point, I would be violating my cost basis. Is that okay with Capital One?
No, I won't violate my cost basis. We got in at unbelievable prices. We bought it on the way down. People were shorted. People were banging it down. Richard Fairbank's great. If he were to come on the show, maybe I would violate my basis. But in the meantime, we are sitting on a gold mine. And I think that stock, now that they bought Discover, we're going to see great things out of them. Do not lose. I'm not saying no. It sells at 15 times earnings. I am saying we got a great basis, and I don't violate it, as you know, from the club. Thank you, club members. I am most grateful. You can't avoid the companies with the best stories anymore. They're the key to making money right now, not minutia. Don't focus on minutia. On Mad Money tonight. Last week, all 22 banks passed the annual Fed stress test, which opened the door to dividend boost buybacks. After a host of announcements last night, I'm going to tell you what I think is, let's say what's what's worth noting. Then Centene fell 40% today after withdrawing its guidance. What the heck is going on here? I'll give you my take. And should investors dive into the metals company? Talk about a story. I'm hearing how the deep sea minerals exploration company is contributing to the renewable energy space with the CEO in one of the most speculative stocks that I've had on the show. So stay with Kramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Kramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.